Here's to see blue.
Good morning, everyone. Welcome to a special edition Monday class. Looks like just Aaron and I are the only one here since everybody's looks like on
It's
Zoom.
virtual, yeah.
Everybody's virtual. I think they're either got summer fever or I don't know, or maybe they're on their way and they're on their phone.
But either way, they'll learn something.
Either way, this is an important class to really kind of dive in on. I asked Aaron to do this class because we are doing in the next 2 Wednesdays in a row. We are covering the condo purchase and sale agreements. We're going to do the deep dive on that, our normal forms class. But we figured it would tie everything all together to help, make sense. And Aaron will be there on the second one because he's got training this week, so he's going to miss Wednesday's class. But we wanted to make sure that you guys get your entire bases covered when it comes to dealing with condos. They can be complicated these days. There's a lot of different issues and stuff that kind of comes up that sometimes surprises brokers. So this will be a really good session to, for everything to make sense. So that's why we're recording this also. With that, let me share screen so Aaron can, I don't know if you can do the, well, do it this way. Let's see if we can do it. All right. All right, you guys can see the screen? Maybe. Let's see, there we go. All right, we're good. I'll go grab the clicker if you want.
Yeah, that's fine. Yeah, I can do this, whatever. All right, well, cool. Well, thank you everyone for showing. I appreciate it. So we'll dive on in. But basically, we're going to talk about the condo sales and the pitfalls to watch out for. And I don't know if you're a certain age, but see, you have the pitfall guy from back in the day. The kids used to play on that. So anyhow, we'll go in. So we'll talk about condo loans, right? And so what a lender will review on every transaction, review the credit or use the income, assets, and property. But the one thing is on a condo, they'll review the homeowners association HOA. That's the most important thing that we look at when we look at a condominiums. They have to make sure that it meets the government guidelines for financing. And so again, we review the homeowners association, but we also count the HOA dues into their debt to income ratio, the ability to qualify. So that goes into that housing expense for what they'll need to qualify for. And then we'll go here. So condos are classified in 2 different ways. There's warrantable and non-warrantable. And so I don't know if you guys have heard these terms before or not. But that's how we break them into warrantable and non-warrantable. That's the actual technical verbiage of what we use as lenders if they meet the government guidelines, condo guidelines or not. And so, well, I'll break this down for you between warrantable and non-warrantable. And warrantable means that it meets the Fannie Mae, right? So, Fannie Mae guidelines and the Freddie Mac guidelines. And if they're warrantable, then they'll get the lowest rates because they meet the government criteria, right? And they're also maybe easier to sell because more people can qualify for these loans, or it makes it more demanding because they meet these government guidelines, right? So that's the idea. So most condos are warrantable, some of them are not. And if they're not warrantable, what does that mean? So a non-warrantable condo means it doesn't meet the Fannie Mae guidelines and allows for expanded guidelines not allowed by Fannie and Frannie. Okay, so and then there's also higher rates based upon the risk assessment because it doesn't meet the government guidelines. They typically have a higher interest rate or are required to do like an ARM program or something like that on there. So they also might be harder to sell. So you can buy it, but it might be harder to sell out of it. And the reason why you're getting the deal on it now is because it's, no one's buying it, right? So typically those are the two warrantable and non-warrantable. Okay. How do I get back over here real fast? I want to see if there's any questions on the chat.
Oh, escape. Yeah, you guys will have to unmute if you have questions.
Okay, cool. All right. So yeah, so maybe harder to resell. Okay, so let's take a look at this here.
Sorry to take the background. There you go.
So what are, yes, the guidelines, so Fannie Mae and Freddie Mac, what are their general guidelines? Typically, the thing that goes above everything else is there any health and safety issues with the project, right? With the building itself? Are there any special assessments pending? Is there litigation? Is someone being sued? Are they being sued? Does like an owner have more than 10% occupancy? Are they a condotel where they have like a hotel and the condominium together? Is there people with delinquent dues more than say 10%? Is it mixed use? What about the occupancy? What about their budgets, reserves, insurance, and all that stuff? There's all the stuff they'll kind of take a look at it. And I think the rule of thumb really is that if you have a client who wants to buy another condominium, and you look and you do your due diligence, if it's something that you wouldn't want to buy because of these some issues with these up here, then it probably makes it not warrantable. You know, so you're probably not going to buy something. People are going to go into like, hey, I don't like the budget, I don't like the reserves. There's a special assessment, and so if those are the cases, you may not want to put an offer in, and therefore it may not be warrantable. But those are the general guidelines. And so what we do as the lenders, we have to go through and figure out to see if the project meets those government guidelines. And so what kind of review do we need? Typically, a review will be, there's two different kinds of review. There's a full review and there's a limited review. And the full review, we're gonna look at the budget, the CCNRs, the meeting minutes, the special assessments and stuff like that. So we'll get the full meal deal on a full review, but typically you run into a full review when you're only doing 5% down. Okay, so the computer system will allow it. When we look at the computer system, when you run it through a decision engine, it'll tell us if we need a full review or a limited review. But typically in these guidelines, 5% down will create a full review. And if you do less than 10% down, then you can get by maybe with a limited review. And a limited review is they're gonna look at a condominium questionnaire. We're gonna, as a lender, we're gonna send them some documents that they need to complete, so we know what's going on with the condominium. And they'll do the condo questionnaire basically for both full and limited review. And depending on the answers, you might need to get you might need more review and more documentation. But the biggest thing is that on this 10% versus the 5%, we're not looking at the full meal deal, budget, CCNRs, meeting minutes, and all that stuff. Any questions in any of that? Anybody got something? All right. Pretty straightforward. Sorry. So then I printed out, you guys don't have this here, but I have a condom certification questionnaire. Now, this is just the first half page, but I printed them out here. I'll give you there. Thank you. It's 9 pages. And so this one is one I took from a condo I did a year or two ago, whatever it was. I was just trying to show you what the condominium questionnaire is. And basically what they're going to do is they're asking a ton of questions on these things and like, how many units are there? How many are rented? How many are not rented? When was the project completion? Are there any units owned by the HOA? They have at least 90% of the total units in the project have been sold or conveyed. So they're looking at just basic stuff, and we'll go through a little bit different. We'll go through later on difference between an established condominium and brand new construction. Okay, but this is the kind of stuff that we would send out, and this is how we're going to find out if there's, what's going on with the condominium. And as long as everything kind of checks out, and most of the time they do, on an established condominium on the limits review, you're going to be okay. But a lot of this stuff is also on the resale certificate too, on that. But I just want to give you a feel for kind of what it looks like, because they'll ask, how many are rented, not rented, what's the budget, and all this other stuff. And sometimes we need it, sometimes we don't. Again, if we're doing a limited review, it shouldn't be a big deal. If we do the full review, then yeah, they'll look at all that stuff, meeting minutes, and look for special assessments and stuff like that. And that's the question, that's on the questionnaire. And a lot of those stuff on the questionnaire will mimic, or will kind of ask what's on the resale certificate as well. So above all, health and safety issues are the biggest concern when we look at any property itself, right? But is the siding wrapped or the decks being replaced? Basic stuff. Is the building reclad? Is there a building reclad project? Does a special assessment need to be needed for deferred maintenance or building for future repairs? That's the bigger one. If you have a condominium and they're doing a special assessment and it is for deferred maintenance, that's an issue because it's health and safety. And they look at that differently. Or are you building for the future repairs? Like, hey, the building's only 10 years old. We're doing a special assessment because we haven't saved up enough in the next 10 years that we'll have to repair certain things, the windows, the decks, and these other things. So that's the reason why they look at the special assessment in a different way. So these are a lot of things you're just not gonna see up front. It's part of the approval process when you get it. So, and not that you see all that, but you'll get a feel for that. And then you also have the, you know, the resale certificate and the meeting minutes and everything else to see the due diligence on that. All right. And then the other thing is you might, depending on the HOA management company, it's either self-managed or professionally managed, right? So depending, typically if you're the smaller units, if it's like 5+ units or something like that, or maybe 4 or 5 or something like that, then you probably have it self-managed. But most of the time they are professionally managed. So you might need more hand holding or whatever it is if you do self-management, because we're going to reach out to the HOA president and say, look, we need to get these things, complete the questionnaire, and they probably don't know what the questions are, so we gotta, you know, kind of walk them through all that. And then if it's professionally managed, it might be quicker, but they charge more for providing the documentation and completed the condo questionnaire. So when we do ask for a condo questionnaire, a lot of times these HOA management companies will charge like $500 to get it, and so we pass that on to the buyer because I mean, it's a third-party fee, it's not our fee, and so. And that's kind of the rub sometimes, because I mean, like, if I lived in a condominium that had that, and I wanted those documents, I gotta pay $500 to get these documents and that kind of thing. So again, there's just little nuances between self-managed and professionally managed. So, you just might want to be aware of that too, if you're trying to get documents and that kind of thing.
Are you gonna go into resale certificate right next?
I'm going to, yes.
Yeah, okay.
Okay.
I'm just checking. I didn't wanna like
No,
bring
that's
a
good.
big question in too early.
This is the fun part. We're gonna do some true or false. Okay. So the first one, do lenders require the resale certificate? True or false? Anybody in the peanut gallery here? What do we
Come
got?
on, Zoom people.
Chat, where's my chat?
Oh, I'd force them to unmute Aaron.
Oh, it's unmute it and just see what you think.
Yeah.
That's cool. Where do you see them? Vision?
Right there.
Click here.
Yeah. There, and then scroll down.
That's all I got.
What do you think, Cal?
I would say yes, resale certificate is required.
Okay. Eric, what do you think?
It's a maybe.
The maybe? Your answer is, oh shoot, sorry. Drum roll, please. I did actually do this. Okay, yeah. Do lenders require the resale certificate? No, they do not. We do not require the resale certificate. The reason being is that we have the condo questionnaire that we'll send out and then we'll get it back.
That's what I asked about that. I don't want to give it away.
Yeah, it would be, yeah, Cal, you're kind of on the right path. I mean, we don't require it. You can give it to me, that's fine. But typically, I don't want to send it to see, if we only need a certain amount of information and the resale certificate has more than what we need, I'll let my condo, I don't want them to be hip on something else. So I'll let them send out what they need to send out and we get what we need from that. So, but what I do sometimes is use a resale certificate to get some information that we normally don't have, right? So I'll go into how we work with that with our condo team a little later on, but that's one of them. Okay. Question number 2, occupancy requirements. If the condo is owner occupied, are there minimum occupancy requirements for the project? Meaning, like, how many units need to be owner occupied? Calvin, you have any idea?
I would say more than 4, right? Or under 4, owner occupied.
Yeah. Okay. So we're just looking at the percentage of how many need to be owner occupied if you're buying in a condominium that is owner occupied, right?
Oh, yeah. Don't know.
So yeah, so do you have any idea?
So there has to be a certain amount of ownership to
Okay.
work on it. So true.
The answer is false.
So you don't have to, as
Oh,
long as
owner
the
occupied.
buyers.
As long as it's owner occupied, all of them can be rentals.
Really?
But the only person has to go in, as long as you're not buying as owner occupied, there is no occupancy requirement or percentage for the condominium. Did you know that?
I did not know.
So yeah, so if I look at a condo, people, I get the question all the time. Hey, how many of these units are owner occupied? I said, how many units are on, or is there a percentage of occupancy that needs to happen on this?
How you doing?
So it's not the case. So yeah, you don't. If you're owner occupied, we don't care how many you rented or not rented. Okay. Sorry. Question number 2. Action required, question number 2. If the condo is a second home or rental purchase, are there minimum occupancy requirements for the project?
And yes.
That is correct. Aaron is right. So it is true. But what is the occupancy requirement? You have to have at least 50% owner occupied in order to buy as a second home or investment property. So if all the units are investment property, right? And you can't buy in there unless there's 50% owner occupied. And we won't know that until you get the resale certificate or we do the condo questionnaire.
Yeah.
So that's the biggest thing. So if you're working with a client who wants to buy as a second home and investment property, then you need to make sure that at least 50% are owner occupied, okay? And does your unit, the one you're buying, pick you over that 50% limit? That's the other part, okay? So I've done that before. So everything I'm telling you here is stuff I've gone through and messed up or didn't know and worked my way, had to wiggle around it. But that's the deal. So if it's owner occupied, if it's second home or rental and you're buying it, the minimum requirement for the occupancy is 50%. 50% need to be owner occupied. Okay. Does that make sense, Calvin? Calvin, sorry.
Yes, I understand.
All right. So then here's another thing too I want to show you is that for new construction, right? So you have old construction and the new construction, but established condos are pretty straightforward. We have all the information off the resale cert, it's been around, and if it's generally in good shape, it should be warranted. But if we look at new construction, all new construction has to go through that full approval process. So we'll look at the CCNRs, all the budget and all that good stuff, right? And the thing is with new construction condominiums, you don't see a ton of them, but I just ran through one the other day, is that they have to be 50% must be sold or pre-sold for Fannie and Freddie to approve it. So if I have a new construction condo, right, and there's 100 units in it, 50 of those units need to be either sold or under contract or pre-sold before Fannie and Freddie will do that loan. So it's hard, right? How do I get 50% of the people do Freddie and Fannie if everyone's doing Freddie and Fannie, right? So a lot of those times with new construction, they have a preferred lender or somebody that will do that, right? And then at that point, you can refinance, and after you get over the 50%, then it really doesn't matter. But the thing of priority on lending that we have an exception with Freddie Mac to that if you have at least 10% down payment, we can get around this. We have a special exemption from Freddie Mac that will allow us to do that. So the good part is we have some alternatives around that. You have to do at least a minimum 10% down with a new construction in order to do that. So I just want to give you a heads up on that. Okay. Oh, sorry. So next time. So what do we do and how we're unique at Priority Home Lending with these? We have a condo database. So in other words, when we've done loans for many years, right? So we put everything into a database that we have. So if there's a condominium project that you were seeing that's been established, I can look at to figure out if we've reviewed that condo HOA in the past and see if there's any challenges with it. So sometimes you might say, hey, look, there's whatever the name of the condo is, HOA. I pull it up and it looked like, hey, 2 months ago, we tried to get this condo approved, but we couldn't because of X, Y, and Z. So at least I can tell you straight up front what the problem was. Then I can probably talk to our analyst and our condo team to explain what exactly was wrong. So the idea is that we get a lot of these things where we're not sure what's going on, and we can help create more clarity for you guys. So we also have a dedicated condo team who will review and approve all the HOAs. So I don't do this, my process doesn't do it. We have a special dedicated department. A lot of mortgage companies don't have this, that we go right to, that we can have them approve the HOA. We have an HOA underwriter. And the other thing is we'll do a cursory review of the project to see if it's warrantable or not warrantable, right? So the cool part is you can send me the HOA docs if you got them, the resale cert or whatever, and I can take it to our analyst and have them review it have them review it to see if it's something that we can do or not. What were the pitfalls? Oh, we have this or that. So it really gets us out of a situation where we try to go dive into purchasing a condo and we can't do it. So we don't want to waste a lot of time and everything else, but it's also good to have that, okay? And they get back to us really fast. We get in probably about an hour or two, a couple hours. If I send the stuff to them, they'll review it right away, which is great. And that allows us to really give you the information that you need, okay? Now, the other part too is we can reverse it. I can do a cursory review on one of your listings in a project. So if you're like, hey, I got a person who wants to sell a condo, do you want to be stuck with a non-warrantable condo situation and now you're holding on to this listing for a long time? Right? So it might give you some clarity if you want to take on this listing or not, right? So so that's kind of the beauty of it. So if you have something you want to look at for a purchase, we can more than happy to take a look at it and see if there's any challenges with it. I'll look at the database. If I find if there's nothing there, then okay. If you think there's anything wrong with it, let me know, especially if there's like a special assessment pending or something like that. Those are the reasons why we can look at those review the docs, the resale cert and everything else in order to go. And then the same thing too on the cursory review for one of your listings. So I think those are really good services. A lot of lenders won't have. They'll say they try to do it, but they're not efficient at it. It might take weeks. We can get this done within a day, which is great. Sorry, okay. So the next thing is I want to talk about, so now I want to jump into doing FHA and VA condominiums, okay? So what we were just talking about is conforming loans, okay? And what we do is we do the condo questionnaire, we dive in and make sure it meets the Fannie and Freddie Mae guidelines. But the thing is, when we do an FHA loan, that's a different program and a different underwriting guideline. So what we can do, they have a database with all the condominiums in the area. So if it's a condominium, the HOA management company typically want to see if we can get it approved for VA or FHA in order to expand the ability to sell it and create an opportunity for more buyers, right? And so the way that you find out if the condominium is FHA approved, you go to the FHA connection website, and I can send that to you guys. But this is just an example of how it looks. But ultimately, you go in, and then you can type in, is it, the state, the zip code, the condo name, and everything else. But what you can do, the easiest way is just to type in the zip code. Because if all these HOAs or the buildings have these weird, unique names, and so a lot of times if you misspell it wrong, I won't find the database. So I would go in there and just type in, the stat, and I'll help you with this. But you basically type in the zip code, and you find all the approved HOAs or expired HOA or condos in that zip code area. So I just pulled one on here, and this is what I used Queen Anne where I was living. So here's two examples. One is Harbor House on Queen Anne, right? So you look at that one, and you have to see if it's approved, because if it's not approved, it doesn't happen. You can't get a loan. You can't do an FHA loan on the project. So for this one, you type in, and it says there's 56 units in the project, and it was approved, but it expired. It was approved, but it's expired. So it was approved in 2018, and then expired in 9 of 2020. So they're only good for 2 years. So that one, there was 2, and then they switched it, I think, to 3. I can't remember. But anyhow, the idea is it says expired. So if you try to do an FHA loan in that project, you can't do it.
They updated this to 3 years now, right?
I think so. This one just showed when they did it before.
Yeah.
Okay. So the one below it.
Oh, I see.
So the one below it, this one has 13 units. This is Johnston Manor. And Johnston Manor, if you want to buy in there, you can, because on May 31st, they approved the project, and it'll expire on 5/31/2027. Okay. So as long as we have the case number, FHA case number before 2027, 5/31, you're okay. So we can close afterwards after we have the case number. But you have to, that's what shows you if it's either approved or expired. It's pretty easy to find. All right. But again, if you need help with it, but that's what you'd want to do. So if you have a listing and you say, Aaron, can you just double check to make sure it's FHA or date? Look at here. Okay. This is for FHA. Next one's VA. Okay. So on VA, you go in and you type in the name and all this other fun stuff, right? So you just go through and hit Washington, and then state or Washington and Seattle. So I did one here, okay? And I pulled another one up, okay? I just pulled anyone that was available. And this one here, this one is in Snohomish, up in Marysville. or Marysville, or it's Snohomish, County in Marysville. And it says status accepted without conditions. That was done in 2018. If it has accepted without conditions, regardless of what day it is, you're gold. So it's done. There's not a lot of, we're not gonna do the condo questionnaire and everything else, because we've already, it's all done. So FHA and VA will not basically insure the loan unless it's on one of these reports. Okay. So if it's not, if it says not on there, or it's not even on there at all, it hasn't been registered, it's not there, it's not FHA or VA approved. Okay.
Yeah, hopefully listing brokers are doing a good job at certifying their listings before they list them, and
That's
they
the
just
next
mark
slide.
a checkbox
There you go.
and say, oh yeah, FHA, VA, it's approved, but yet it's not.
Yep,
It
yeah,
happens
that's always fun, yeah,
all the time.
there you go. There you go, Eric. True or false? Now, you're the one who responded here. So, do you trust the age remarks about FHA, VA condo approval?
What do you think, Samantha? Call on people now.
Okay,
And ask them to mute.
shoot. Eric's here. Board's telling us to
Yeah.
mute.
Do you,
Okay.
well,
What do
he
you think?
just said no.
Yeah,
Well,
it's true. Thank you. I really appreciate it. That's awesome. Because when I first did, I kid you not, I did one, this is back in 2007, 2008. I didn't know, saw the age remarks. Oh, great, it's FHA approved. They told me, hey, there's a website you need to go to. We talk about website, right? Yeah, I look at it and it's not FHA approved. So then we had to go through and figure some of, they used to have spot approvals. And I'm not going to bore you with all that, but ultimately you could do a one-off unit in the condominium, but you had to show that none of the other units had were FHA loans. The problem with that, they had 200 units.
Well,
So I had to get all 200 deeds of trust to show. Oh, it sucked.
that's insane.
It sucked. So that's the thing. So yeah, so you don't trust the remarks. You know, like what Ronald was going to say, trust but verify.
Yeah.
So what you do is if you see it on there, I would go to one of the two websites and make sure it's on there if you're looking at FHA or VA. Okay. It's due diligence.
All right.
The next one. Let's see. If a condo is FHA approved, does that mean it's also VA approved? Anybody?
Eric, what do you think?
I don't think so.
The condo is
No, I
FHA.
don't think so either.
Yeah, if the condo is FHA approved, does that mean no? There's no reciprocity. It doesn't go either way. You'll look on either one of the websites.
Yeah. They
Because
got
I thought so too.
Separate links.
Yep, separate links. So most of the time, well, I wouldn't say that. I don't know. It doesn't matter. You have to look at it because I wouldn't say some of them are more than others. It just depends. Maybe FHA has more of a guideline where VA doesn't. The thing is with VA, they kind of conform to the Freddie Mac guidelines.
Yeah.
As opposed to FHA that doesn't. So it just kind of depends, but you got to look at both of them and you just have to make sure. So especially on a listing, or if you're looking at buying into it, you have a buyer who's FHA approved and that's all they can buy. I would probably take a zip code, plug in the zip code and find the list of all the condominiums that are FHA approved and look at those and see if there's anything in there. Because if not, you're gonna be wasting your time trying to look for condos that aren't FHA or VA approved.
Yeah. And again, don't trust what the listing brokers marked. I mean,
They lock them all the
I
time.
guarantee if they had to like an audit, I'll bet you 50% of them
Really?
are correct.
Yeah, so.
Sadly.
Yeah, I just don't know. I mean, maybe they think hey, the neighbor said it's, or maybe the HOA said it's VA approved or whatever it is. I don't know. But usually, if you have a good management company, they will want to get it FHA and VA approved. And if I'm on the board or if I'm buying into it, I want to have as many options as possible.
Yeah.
If I want to sell it, right? And also, it's better off if it's all these are approved. That means it meets a lot of these guidelines. So right now, I mean, that was stuff that happened when Miami was 5-6 years ago.
Yeah.
The condo fell down. They just kind of created a whole reassessment of what's in there, what we need to do, and these other things like that. So yeah, but yeah. Answer your question, yes, it is false. Yeah. Next one. So I want to give you an example.
All virtual.
Oh, virtual.
Yeah, recognize
You're more
that,
than welcome to come in and sit down. So I want to give you an example of the island condominiums. It looks nice on the outside.
Yeah.
So I had a client of mine who wanted to buy into this property. And in fact, I didn't know this at the time, but I know the seller of the property. Because I helped her buy the property 10 years ago. Okay. So this is the island condominiums. And so this is what it looks like on the outside. And they want to put an offer on it. Okay, great. But there's a special assessment. Okay, let's find out what the special assessment is. Well, it's for this, siding and everything else. So I look at it. And this is, I went over there because I wasn't sure what was done, but they're redoing the siding, the decks, they got the bolt, the door bolted off. And these other things. So this is what's going on with it. So we're doing the whole reclad of the project. So then I was like, okay, is this acceptable, not acceptable? I mean, I'm not 100% sure on this stuff, so that's why I use my condo team. So I took the pictures, I took the resale certificate and sent to my condo team to have them take a look at it and see what they thought. Okay. Now, the thing is, there's a website that all the lenders use and that is on a Fannie Mae website, okay? And what happens is, if it is black flagged on this website, it doesn't matter what lender, it's on this website. You're on the blacklist, okay?
No.
So it says, Fannie Mae review status unavailable. Okay, updated January 8th, one day before my birthday.
Oh.
This project's in need of critical repairs and may have conditions such as material deficiencies and significant deferred maintenance. The unit in this project are subject to current or planned special assessments intended to cover the cost of the critical repairs, although necessary repairs have not been fully completed. Okay, so I didn't know this until I found this out, okay? Because I'm constantly learning that if you submit this stuff to a lender to have them review the project, they have to upload this stuff to Fannie Mae. So it gets flagged because someone did it, we can't do it, and I guess we've all agreed or whatever that you have to submit this stuff to Fannie Mae. So once it gets flagged on this, nothing you can do. It is absolutely,
So no one will lend on it.
it's non-warrantable at that point.
Ooh.
All right, so then we talked about non-warrantable. Hey, there's some other guidelines and other stuff, right? Well, it's health and safety above everything. It doesn't matter if it's warrantable, not warrantable. Health and safety will trump anyone. So no one's going to do this because of the critical repairs that are going on with it. All this stuff, okay? And so it makes you wonder if they're replaying this, what was behind it? What was going on with it, right? That's the biggest thing they're looking at these things. So then here's the Freddie Mac version of it. So Freddie Mac got flagged too. It says it's not eligible, okay? And then here it says the condominium is not eligible. A mortgage secured by a unit in this condominium is not eligible for Freddie Mac due to critical repairs. You are done. So the question is, if the agent had told me before you put it listed for it, I would have said, hey, right? So now he's saddled with this thing, right? And what do you do, right? So that's the
Cash
thing.
offers only.
Yeah, or
Right.
how long will it take for it to be done, right? So that's the other thing, right? So we try to go around with it, because I have a buyer who really wanted to buy it.
Dang it.
And so it's like, you do a purchase and sell for 4 months, and hopefully, I don't know, but
Yeah.
that's kind of how it gets flat. So this is real life stuff. So then, here's the email I got from my condo team. It says, before Freddie and Fannie will do a loan on this project, all repairs need to be 100% completed. And inspections done showing all repairs are completed, okay? And if there's been any water intrusion in the project, and mold inspection will also have to be done showing there's no mold in any of the units.
Dang.
So, this is what's causing issues for people, because they're like, well, what kind of inspection? I would think if you're doing this major, reclad
Yeah.
of this thing here, the HOA you're gonna have an inspection, make sure it's done, because they know it's flat, right? It's flagged, and all these agencies are gonna figure out what's going on. So after it's done, it'll be okay.
So those are new windows too.
Yeah, it's all, they're doing a lot of stuff, so it's a lot, so it can be good. And you would think inherently, well, they're doing all this stuff, how come we can't close on it? It's just them the rules, that's just how it is. You're on that list, and you get burnt. You get that. We'll right into that one, that's not good. So that's kind of the idea, so, if you wanna look at stuff for random, if you're getting a listing with, stuff like this. You better run it past me or find somebody who can look at it. I mean, it doesn't take me a lot of time, just give me some information, we can do it. But there's a lot of this going on.
Oh, yeah.
And so the trick is just how do you get around it, right? So again, it's either cash offer or we wait until it's done. So in this thing, I think they said it's gonna be done in another 2 months. So I guess one option is to, hey, do a purchase and sales agreement. Don't lock anything in,
long
you've
close.
got it, do a long closing and see what happens, right? Bottom to bottom, I don't see what they wanna do, I don't know, but yeah, that's the deal with it. So then, what kind of loan programs are available on condos, right? We got the cornucopia of loan programs. You got FHA, VA, jumbo, conventional, owner occupied, non-owner occupied, reverse mortgages you can do on these things. HELOCs, cash flow loans that we talked about, with those investor ones where you can use the cash flow of the property in order to qualify. So yes, we've got all these that you can use for the. Oh. Okay. So then, so any questions for you guys on that? Does that kind of make some sense, what we can do? So. So anyhow, then the next thing is I want to go through and I want to show you. If you want to make an offer on a condominium, is that going to slow you down for what you want to do? So if you make an offer on a home, on a condominium, and in a competitive market like this, a lot of people want to waive your financing and everything up front, so you can beat a cash offer. But the challenge with that is if you don't, I don't think you want to waive your financing up front. Because then the challenge is we still have to get you have to see if the condo's warrantable. And if you waived everything and the condo's not warrantable, then you're kind of stuck, right? So one other option I think is pretty helpful is that we can waive the financing after we get the HOA approved. So getting the HOA approved, then everything else becomes normal, because then it's, we'll hopefully have the appraisal at that point or whatever. But sometimes that works out pretty well, trying to waive the financing after the HOA is approved. We do that, you waive. The other thing is we can close quickly just like any other transaction. Challenge is that it depends if it's self-managed or a management company. And how fast the management company or a self-managed company can give us what we need. So a lot of times it might take them 7 to 10 days to complete the condo questionnaire for what we need. Okay. And they charge different money for different speeds. So if I want, it's $300 for 10 days to get the condo questionnaire back. Or I can spend like $700 to get it back in 2 days. So it just kind of depends on how fast we're closing and that kind of thing and how fast we get the documents back. But typically we can close like any other transaction, anything else. We need to close in 2.5 weeks, we can. It's just the challenge is we have to worry about how fast we can get the documents back from the HOA management company to make sure that it meets all the guidelines that we need. Okay. Have you guys ever waived financing on a condominium before? Here's the other question. So if you waive financing, this is a question for you, and this will probably be on Wednesday. I think you still have to have the condo reserve cert, right? You can't waive that. Right? So regardless if you waive your financing, you still have to have the resale cert. Yeah, so that's kind of the deal. So but basically, I wouldn't waive it up front. I just would because you're not sure what's gonna happen, you put earnest money at risk and everything else. But after you get the HOA approved, then I think it'd be anything else, if you haven't fully, credit, income and assets, everything else is exactly the same. So that's pretty much all I got. Is there any questions? Anybody? I guess I know you guys think you know everything, but you probably do.
It looks good.
Yeah, just a couple of just refresh reminders. So, because I think a lot of times you don't know what happens behind the scenes with trying to get what we need. And so I think that condo questionnaire, I think for you guys, just if I'm listing a property, am I going to get a dog if I can avoid it, right? Or if I'm getting a dog, I'm okay with it. And if I want to buy something that has a special assessment or there's that reclad or whatever's going on, send it to me. I'll be more than happy to take a look at it, go through our database and see if our condo team, when they look at it, has any questions or something we need to worry about, or is it on that blacklist, right? We don't want that.
Yeah, honestly, your guys' condo team's probably the best I've ever seen.
Oh, it's got so much better. When we first started, you know what I mean? But they're quick. It's great. You want answers. That's the issue, right? It's either good or bad. You just want an answer. And so we are very good at that. That is one of the things that we were great at, for sure. Thank you.
Any other questions? Then I got a few things to add.
Any questions? Anything else? Okay.
No.
All right.
So, a couple things. Aaron covered a lot of really good information. This is really going to tie things in on Wednesday when we begin the first part of the purchase and sale agreements. But you want to be really careful, just like Aaron said. It's like start out and finding out if projects are even able to go FHA or VA, or if they're even on the naughty list. It's not just like You know, and that's every condo. You have no idea like who's, as soon as you go show a property and you see that they're working on condo buildings, that should be your red flag. Kind of like, oh, I see they're doing a new roof. Oh, they're doing some windows and landscaping and stuff like that. Probably not too worried about, but big ticket items, you really need to make certain that you guys do your due diligence before you're wasting your time and your client's time. I mean, you could get someone literally far down the road in a deal and no one's done any of the like homework to check up on the condo to see if it's even gonna work.
A good lender will look at that.
Yeah.
All right, a good lender is going to ask you these questions, and if they say, "Oh, it's not a problem, we'll figure it out," then I'd be concerned.
Yeah, yeah, no, for sure. Another thing to take into consideration when you're dealing with condos as a listing broker. Yes, you're gonna do all these other things that Aaron went over, to find out what type of financing is okay and if the project's approved. But then the next thing that I've really gotta find out is about the HOA and the property management company. Is it self-managed or is it the HOA management professionally managed?
Mhm.
All of them have different portals and stuff like that you'd be dealing with. The seller has to know upfront that they're gonna be paying money to get these resale certificates. And something even more important than that is you have to find out how long is that resale certificate good for. You would be shocked. There's some companies, literally, they're only good for 30 days. It's terrible. So that means if your deal gets extended, or if it doesn't close within that 30-day window that you issue the resale certificate for the new buyer, the seller's gonna have to pay and get a new one. We had a deal in here last summer, where they had a delay. One thing came up and they needed 1 day extension. The 30th day was the day of closing. Nobody realized it until underwriter said, your certificate's expired today, so we're gonna need you guys to get a new one. We can't fund until you guys on the deal until that this is good, because it expired. So they had to go back, get it again, and the seller had to pay another $350 just for 1 day extension. And they wouldn't do it. They would not bend their rules. So you really gotta be careful and watch out for that. Sometimes listing brokers just automatically will tell their seller, yep, we're going on the market, order it now. So make sure that they check how long is that good for. They usually typically are about, 60 days, 90 days, I tend to see. But once in a great while, you're gonna come across those ones that are only good for, a month or 45 days. And it's just not enough time. So be very, very careful with that. And then last but not least, insurance. Just like Aaron talked about, there is a huge condo project that in Florida that collapsed. And literally drove by when we were in Florida for the NARP event a few years ago. We saw the project where it was and stuff, and it's just eerie, it's all completely fenced off and stuff. But, having a condo building collapse, when that happened, all insurances went up and so did the scrutiny for approvals. I mean, realistically, they're really checking on that. I don't think it's a bad idea to include that 22 VV, for a forms class that we went over a little while ago for the insurance contingency. And it's for buyers to not only be approved for the insurance, but also the cost of the insurance or any additional coverages that they want, including earthquake insurance or flood, or any of those other items, that they want to add, but you can include that 22 VV. I think it's a good idea. I literally last week ran into one of our brokers here who has a deal, and it's a situation where the insurance is super high on this condo, and they said they can't afford it. the lender's not gonna be able to, you know,
Yeah,
the lender, they're approved,
Yeah,
but they can't afford the insurance. How do I get the buyers out of the deal, Eric? Well, hopefully you have a 22 VV to be able to get them out.
oh,
Because otherwise, you know, they're gonna argue and say, well, you didn't have an insurance contingency. You only had a 22A financing contingency. So you just don't wanna be in that predicament, you know, it's really tough when, you know, insurance these days is getting higher and higher and the affordability is getting worse, right? So
yeah.
what do you do?
Yeah, there's certain guidelines. So sometimes you've seen, there's a thing called insurance pooling.
Yeah,
So a lot of these condos, what they'll do is they'll say there's a condo in Kent, condo in Seattle, and one in, you know, Bremerton, for example, right? And they will all be on the same insurance, okay? They don't allow you to do that because they're afraid if Mount Rainier blows up, right, and all, we're all gone, then you can't do this. There's like nuances like that, but that these HOAs try to save costs, and that's the issue that you run into sometimes.
yeah,
So, and then, yeah, we'll just do everything we can. I've got stories upon stories about how you save deals, and one of the ones I didn't know is the delinquency. If you more than 10% of the units are 90 days or something past delinquent, it's a non-warrantable issue, right? So you won't do it. So then,
and that only comes out in the questionnaire or
correct, on the
in
questionnaire,
resale
in the
certificate,
questionnaire, right? Because we don't need I mean, I guess we need the questionnaire to a certain extent, but that's when we use the condo questionnaire. And so it came back and it was like, we can't do it. And I'm like, what do you mean you can't do it? And of course, then I went back to like the condo questionnaire.
Yeah,
And I was like, not the condo questionnaire, but the resale certificate. And I was like, we have the same dates on there. When was the last time, you know, this is a numbers game, right? Then I'm going back and saying, how many units are there and are they still delinquent? Because what happened was they switched management companies,
oh,
right? And they're using the old information from the management company, not, I said, just do a recount.
a demand
Recount,
recount.
that's right. Sure enough, they miscounted. So I was like, because I wanted to make sure, and because our unit that we bought put it over the limit of being,
Wow.
you know what I mean, being up to date. So therefore we got it. So those are the things that we will do. If it's stuff like that, it's just,
Yeah.
it's little things.
See, that's the kind of stuff most lenders, they just give them, say, oh, I can't do it. They,
Oh,
like,
yeah,
most
or-
lenders could be
or
like,
like-
yeah, I guess we can't lend on it,
For
sorry.
example, like the big banks, Wells Fargo and other ones, I had so many deals with people like, oh, they're not gonna do it, they won't do it, and then our common team will just ask a couple extra questions. Oh, that means the government got, you know what I mean, like, so stuff like that, I think especially for condos, we're really good at. For really trying to make it work, absolutely, so,
Awesome, man.
well, thank you.
Well, if there's nothing else, you guys, then that is it for today.
I did have a
So-
trivia question.
Oh, you do?
It
Do
depends
it.
if anyone's gonna answer the trivia question.
Yeah, let's see.
Here, oh, okay, now she's.
Kristen will.
Oh, you do? Okay, hold on. I think I printed, give me a sec.
Uh-oh. Gonna grab it off the printer. You have a condo question?
I do.
What's your question?
So we have this condo that has HOA dues of $872, I think it is. It's tiny little, like, 2-bedroom, 1-bath condo in the lakes. HOA had been managed really poorly. And so they just raised it dramatically. There's old plumbing. Repairs that need to be made for that, potential special assessment coming up. On top of the extra dues. Would there be any issue with getting a loan on that project?
Well, it depends on what again, is it for deferred maintenance that they need to have a special assessment for?
Yeah,
Yeah, but is it failing now or is it they're just planning for it?
it's failing now.
I don't know, that might
It's a
be,
crapshoot, no, probably.
yeah, I don't know, if we give it, I
What
think,
does the lender look at? Do they look through and say, hey?
if you have a resale certificate,
Yeah,
just send it to me and I'll send it to my condo team, and they can look at it.
okay,
We'll just say, look, is there an issue with this? Because you have the bylaws and all the other stuff, right?
Yeah.
Yeah, I can send it to our condo team, they can look at it and just say, look, yeah, you're gonna have an issue or not issue.
okay, yeah, I just had a buyer, they looked at it like, oh, I really like this unit, but looking at the HOA docs, it's like. Is there gonna be something big coming down the road and?
Yeah.
Can I even get finance for this?
Yeah,
Yeah, but we can, yeah, you give me the stuff, I can take it to my condo team.
love it.
Exactly example, what we can do.
That's exactly it. What,
trivia question I have?
trivia question?
And what card game would you be dealt the Yarborough hand?
Yarborough?
A Yarborough hand.
Spell that.
That would be a Yarboroughh. Yarborough
Yarborough.
hand. What card game? What card game? Anybody out in the gallery? Samantha?
I don't know.
Answer is bridge.
Oh,
The bridge. Okay. What point value is the letter Q in Scrabble? How many points do you get for the Q in Scrabble?
I got
10.
that.
That is correct. 10. 10 is the answer. And the last one. What is a group of hippopotamuses called? Yeah. You have a bunch of hippopotamuses.
Heard. Heard.
No. Kind of close. Actually, a bloat
Bloat.
or a thunder.
Wait, a float or
A bloat.
Yellow.
B-L-O-A-T, like. Man.
Right on, the more
Well,
you know.
Thank you for joining today. If you have any questions, just let me know. But I'm here to help and support you guys, so if you have any questions, let me know.
Thank you.
Yeah,
See
appreciate
you
it.
guys tomorrow.
Yep.